But I think the most relevant one, which I think will be more fundamental to the Bitcoin adoption at Harvard, will be a case written on MicroStrategy. On the whole, I think it's been a bit underwhelming for me personally. I came in very excited last year, thinking that I'd find some like-minded people over here, but there was basically absolutely no one. In a batch of 1,000, I struggled to find one other person over the course of the whole year who had a similar sort of interest in Bitcoin. So that's true, that the higher the NAV goes, effectively, the more effective each subsequent raise becomes in terms of increasing the Bitcoin per share. And it's just like, yeah, it's a reflexive flywheel, and yeah, there's no end to it. It's magic in financial engineering, maybe.
This podcast is entertainment, not financial, tax, or legal advice. Views expressed represent statements of the speaker in their individual capacity, do not represent the views of Unchained, and should not be considered investment advice. Speakers often have personal, family, or business connections to Unchained, which may include direct financial benefits. Please see our disclosure at unchained.com/podcast.
Hey, everybody. Welcome back to the Bitcoin Frontier podcast. This week I have on CJ. CJ, welcome.
Thank you so much, Joe. Happy to be here. Excited to record this with you.
Absolutely. I'm excited as well. I know you've started to make the podcast rounds a little bit, but for those that haven't seen you or heard you yet, what's your background and what have you been up to?
Sure. Happy to share that. And just apologies up front. I have a bit of a sore throat, so I hope it's good. But my background is I'm originally from Mumbai, India, born and raised there, spent my entire life in that one city. I only ever moved last year to come to Harvard Business School here in Boston to start my MBA. In Mumbai, I studied mechanical engineering in my undergrad days. I sort of liked science and engineering, but then kind of fell out of love with it, didn't pursue that as a career. I switched straight away out of school into finance. So I was working in Blackstone and private equity, focusing on investments and buyouts in India, South Asia. I did that for 4 years. I really liked it, learned a lot, incredible team, incredible work. But sometime in that phase, in the last bull run, 2021, 2022, I discovered first crypto, then Bitcoin. Happy to speak more about that as well. And kind of became that obsessed Bitcoin guy in all my social circles with my family, friends, colleagues, everyone. And the typical track that a lot of seniors followed from Blackstone or from private equity in India is that they would apply to business schools in the US. And I just kind of followed that same track. And I came to Harvard starting the MBA last August. So I've completed 1 year. I'm currently pursuing my second year as a 2-year program. I'll graduate in May next year. And I came here, very energized to sort of get integrated into the Bitcoin ecosystem in the US. I've had varying degrees of success over there, but it's been a great journey so far. I interned at MicroStrategy over the summer in their capital markets Bitcoin treasury team, which was an incredible experience. I'm continuing that internship right now on a part-time remote basis as I complete my second year. And yeah, that's a little bit about myself, and happy to speak in more detail about any particular phase.
Nice. Yeah, I love your background. It's super interesting. I want to learn more about your experience at Harvard now that you've completed your first year. What's been your experience talking to peers, professors, or just anybody there about Bitcoin? Are they receptive to it, or are they like, what is this guy doing?
Yeah, it's on the whole, I think it's been a bit underwhelming for me personally. I came in very excited last year, thinking that I'd find some like-minded people over here, people who share the same level of enthusiasm, or even if they're not like full Bitcoin maxis, they have like some interest in the space. But there was basically absolutely no one. In a batch of 1,000, I struggled to find one other person over the course of the whole year who had a similar sort of interest in Bitcoin. I think the general consensus or the general sentiment around the campus among the students and peers was that if you did buy into the crypto mania in the last bull run, you were almost kind of embarrassed by it, and you didn't want to, talk about the fact that you bought some Dogecoin or some Ethereum or whatnot, and it crashed 80-90%, and you would almost like joke about it in a way where you're making fun of yourself. But I also appreciate the fact that I joined at the depths of the bear market, because then when I would bring forth my arguments, either in like discussions with small groups with friends, or in the classroom where there are like 100 students discussing something, debating some topic, I could bring forth like the argument of Bitcoin versus, let's say, fiat, or Bitcoin as sound money, private property. and there would be less noise of crypto around these discussions, which I think was a big plus. And then you kind of ride the wave up from $20,000 to 30,000, 40,000, 60,000. And as you keep sort of having the same arguments, putting forth the same points again and again over the course of a year, and the price goes up, it just sort of acts as a way for people to think that you have more sort of to share, you have some credibility, and it gets people interested a bit more. But the other thing I'll point out is a lot of people come to business school with the idea of pivoting into a different sector or a different career trajectory. And if you're doing that, then you already have so much to learn about a new sector or new industry. You don't really have the time, the bandwidth, or like the capacity to learn something as complicated and intricate as Bitcoin. So that's one challenge. And among the professors, so what I did was I went around at the end of my first semester and the second semester last year, and I gifted each one of my professors a book on Bitcoin. So it was the Bitcoin Standard in the first semester. It was Broken Money in the second semester. I'll choose another book this semester. But what I started thinking was students don't really have much time. They're busy with classes. They're busy socializing, partying, networking, figuring out the next job. Professors might have more time on their hands, and they have like that academic orientation to begin with anyway. So hopefully they'll read the books, or they, find this interesting. So I don't think they've been reading the books, but it's kind of at least lying there on the bookshelf. So the day they maybe find Bitcoin interesting again, or it's flashing on like the front page of New York Times, Wall Street Journal, maybe they'll pick up the book, or at least they'll find the signal of Bitcoin from a good resource as opposed to, again, a lot of noise in the media. And yeah, that's been at least a broad reception among friends, peers, professors regarding Bitcoin.
Nice. Yeah, those are two great books to gift the professors. Do people distinguish between like Bitcoin and crypto at all, or is it kind of all just lumped into one thing, like when it gets brought up?
It's pretty much lumped into one thing, but I would like to believe personally that I've been doing a good job correcting each and every person. Whenever they ask me that, oh, what are you doing? Oh, was it crypto? And then I always correct them, say Bitcoin, not crypto. And the way the first year is structured for us at the MBA, in the MBA program, is that from the batch of 1,000, we split into like 10 sections effectively. 100 students studying together throughout the year, like taking all the courses together. So at least my section of 100 people now fully understand, at least, or not fully, but to a partial extent, understand the value proposition of Bitcoin and can differentiate Bitcoin versus crypto, because I've just been bashing that thought again and again in their head. But for the larger ecosystem, I still think they kind of conflate the two, and I just do my best in correcting them each time. I'd also point out that there is a student club here at Harvard, which is, it's called the Blockchain and Crypto Club. I believe the origins 5, 7, 10 years ago was as just a Bitcoin club, but it kind of got co-opted by the crypto guys. What I'm trying to do now is I'm trying to rebrand that from the inside as a Bitcoin club again, block the noise of crypto and make it a Bitcoin only club. Again, varying degrees of success. Is just early days in that journey, but also trying to take that forward.
Nice. Yeah, that's a great goal. I definitely think you should do that. Are there any courses on Bitcoin or even broadly like crypto blockchain at Harvard?
So there are some courses or like there are basically the way the MBA is structured is that each course has multiple different case studies, and you effectively study the case before class and you come to class and discuss that case. And the objective is that you're learning some new concept that is fundamental to that course through the reading and discussion of that case. So I know that there is, for example, one case written on Ripple. I think it's an old case, 5, 6 years ago. It was relevant back then, still being taught now. I do not remember which course is it taught in or what's the fundamental like objective of that course. I think it's related more to like securities law, perhaps. There's a whole course now that I could potentially take in my next semester, which is I think around new upcoming technologies. And as they cover 3 different technologies, and one of them is just Web3, which is like not Bitcoin, but it's like the larger crypto ecosystem. So that's there as well. But I think the most relevant one, which I think will be more fundamental to the Bitcoin adoption at Harvard, will be a case written on MicroStrategy in a course that's taught for just people who think of themselves as CFOs in the future, or like just teaching you the skill sets of a CFO, just corporate finance and different concepts around it. And this, again, is a case that is written 2-3 years ago, and it's not been updated since. So it doesn't, let's say, necessarily have the facts and figures of the latest, let's say, the balance sheet of MicroStrategy. But when it's taught, obviously, students pay attention to it. They learn about MicroStrategy. They learn about what they've been doing. I think that will be the almost like a Trojan horse. It's not people learning about Bitcoin directly, like Bitcoin is a technology or Bitcoin is money. They learn about MicroStrategy, why it has succeeded, what has it done, and I think that will be the gateway to actually understand Bitcoin in more detail.
Nice. Yeah, I completely agree with that. When you think of Bitcoin, you and maybe even Michael Saylor too, I think you've had a couple interactions with them at least. How do you guys think of money, or how do you guys think of Bitcoin? Is it money, or is it like an asset, just an asset?
Yeah, it's I think it goes through so many different shifts. At least personally in my head, I it'll be difficult for me to actually comment on how Michael necessarily thinks of it. I know he has on multiple occasions spoken about his favorite framing of Bitcoin being digital property or digital capital, sometimes even digital energy. I think the digital property one is a really good one. Framing it that way really gets a lot of, at least, people who've been born and raised with capital or with some certain level of just quote unquote privilege, who understand and realize why real estate happens to be a good way to store value, park value. And then you think of property that way, and then you talk about Bitcoin being digital real estate or digital property. I think that's a really good analogy, and it sort of is better than a digital gold analogy. So I really like that as well. But for me personally, I understood Bitcoin as money. I understood Bitcoin through a lot of reading and listening to Seyfuddin Ammous from that Austrian economics perspective. And that is my go-to sort of tactic to explain Bitcoin to any friend as well, that, what is money? What is inflation? Start from those fundamental questions and then talk about Bitcoin being a superior form of money. And I really like that. And I kind of stick to it even now.
I agree. That's a good way to frame it. What do you think the catalyst will be for your professors and your peers, at Harvard, maybe next year or maybe years down the line, to really help them like understand Bitcoin? Is it like the case study that you mentioned on MicroStrategy, then like really diving deep into that? Is it like the price going up and then them just like accepting that this is reality? What do you think is going to be the catalyst to get them further into Bitcoin?
I think it'll be very similar to what it was for most of us, or at least for me personally. The catalyst was greed. Didn't know anything about Bitcoin or crypto. I was working in finance. My high school friends who were like up to no good, honestly, were making money trading crypto in the bull run. And I just got greedy and I'm like, I should make more money than you with like my assets. I started buying crypto and that got me interested and that got me to learn more. And I think it's going to be the same over here, that there'll be like one individual will go to 10 individuals, 20 individuals, 30 individuals, just talking about Bitcoin or buying Bitcoin. And then one person in the faculty might buy some Bitcoin or talk about it or write a bit more about it in their papers or build some case or course around it. And I think it's just evolutionary from that point on, that when you see one group or one individual thriving, as the price rips up, it goes up 2x, 5x, 10x, wherever it goes. And then you see that person doing well, talking about it, boasting about it. Then just out of jealousy, greed, whatever you want to call it, you will pay more attention to it and you will just try to copy it. And I think that's just the inevitable way it grows in the larger community. And I think it's the same here at Harvard Business School. But again, I'll bring back the point I made earlier. I think obviously it's a business school. So there's a focus on businesses. There's a focus on building or, nurturing students who want to go on and become CEOs, CFOs of Fortune 500 companies that want to launch investment funds. So there's a lot of focus on finance and investing. And hence, you have to find a way for Bitcoin to sort of come through that angle or come through that lens. And I think MicroStrategy is that. And as MicroStrategy gains more and more prominence and relevance in the mainstream media and mainstream corporate finance world, it'll also sort of percolate here in the form of different discussions, in the form of different talks and events as well. Like, who knows? Hopefully, we can have like one big blockbuster event where there's someone like a Michael Saylor coming here, speaking with a famous Harvard Business School alumni, someone like, I don't know, Jamie Dimon, Bill Ackman, Seth Klarman, and the two of them are sharing a stage in front of 2,000 MBA students talking about Bitcoin as money or Bitcoin as capital. And things like that, I think, will then really get people interested. But it has to be when the price is rising. When the price is falling, the interest is just going down and down and down. When the price is rising, interest is just coming back up.
Yeah, it is funny how everyone just follows the price. But it seems like that's, kind of inevitable. When you've interacted with, I guess, Saylor a couple of times, do you have any like unique key takeaways? Like, did he say anything that, most people haven't already heard of before? Or did you learn anything in particular that you might want to share?
Yeah. So the one thing that struck me the most, and it's a very personal one, I don't know how relevant this might be for the larger audience, was for 1 year at Harvard Business School, the way we were being asked to, let's say, prepare for our classes, these cases beforehand, we were being told strictly not to use ChatGPT or AI because, then you don't need to read a 20-page case study, spend 1 hour reading that, thinking about takeaways. You can just upload it on ChatGPT, get your takeaways quickly, and come to class without doing the full honest work, and hence taking away less from the class, learning less, because you're putting in less. So I was almost like, I was never really training my muscle on how to use ChatGPT very effectively as a tool to think more, to learn more. And when I met Michael for the first time, we were basically brainstorming the presentation he would finally go on to deliver at Nashville, which was an excellent presentation. But he was just using ChatGPT so extensively to think and to just ask questions and go back in time and get random data points and ask it to do some basic simple calculations as well, like stuff that you could anyways always do, through Google and through, I don't know, just notes. But just seeing him use that as a second brain, I was just personally very inspired that I realized that I should be training myself to think more deeply and effectively using ChatGPT whenever I have like different ideas in my head and I want to, go deeper with that thread. I should be using ChatGPT. It's so much easier than going on YouTube and finding the right podcast or right 10-minute video to explain a concept. You can just go on ChatGPT. So that was one. And the second big, I think, insight to take away for me personally from just interacting with him was he obviously comes across as someone who's super wise and super knowledgeable when you see him on different podcasts, when you see him, present in conferences. I think it's more of the same when you meet him in person as well. But with the added level of really high focus or intensity in a good way, where it's almost like his mind is always switched on, always focused, always thinking about Bitcoin, about MicroStrategy, about Bitcoin advocacy. And this is not, again, through my personal interaction, but I remember one quote of his, which I think he has said on different podcasts, or maybe he's quoting someone else, which the quote goes like, people don't fail because they pursue bad ideas to the detriment of their good ones. They fail because they pursue good ideas to the detriment of their great one. And just the idea being that you find the one thing where you are great, the one idea, which is the great idea, and then you just go all in, hyper-focused, laser eyes on that one idea, and you just don't stop thinking about it. And I feel like he embodies that spirit. And that is something like I also personally think about more and more, that let's say I'm running this student club at Harvard Business School for 1 year. Sure, I could do like multiple small events and they'll be good. But what if I just focus all my energy on doing that one great event? As I was discussing, 2,000 students listening to Michael Saylor and Bill Ackman. I think that's a great one. And I'm going to like just put all my energy behind that.
Yeah, that's so interesting. This will be kind of interesting given your private equity experience and just the way you think about valuing assets in general. If someone asks you, Bitcoin has no cash flows, how do you value Bitcoin? What would be your typical response to that question?
Yeah, that's a question you get very often when someone is trying to understand Bitcoin for the first time. I feel like I keep tackling it in different ways and I've never really found the sweet spot or the right answer. The one I typically would say is that a commodity doesn't have cash flows either. So you can't find some quote unquote intrinsic value of a commodity by discounting future cash flows. You can price a commodity based on simple demand and supply. And that's how there's a price discovery of the commodity. And it's the same for Bitcoin. There's no discounting of cash flows or discounting of some future accretion. You are just looking at demand and supply and pricing it. And that's how the price discovery is happening. Another way I like to phrase it sometimes is that gold has no intrinsic cash flow either. And gold should be thought of or understood as money. And there's a reason that gold emerged as a global money across the world. People use different kinds of money, but they eventually migrated or transitioned to the hardest money, and hardest being hardest to create more of. So whatever scarce, desirable, hard to create more of kind of becomes the money that the people choose. And Bitcoin should be thought of in that same lens. There are no cash flows. It's just the hardest thing to create more of. And it should be thought of as money. You should understand the evolution of gold as money and why the next transition might be to Bitcoin. And yeah, at least that's my response. I still don't think I have a good one. I'm curious if you have a good one that you can share with me, but that's my go-to one.
Yeah, no, I think that's a good way to go about it. I've thought about it too. Like, I guess one thing that I've thought of is like you should be valuing your assets denominated in Bitcoin. So it's like if your house you bought for 500 Bitcoin, many years ago is now worth 7 Bitcoin. Well, then even if you're renting it out, your cash flows are going down. So it's like maybe you should just hold the Bitcoin, hold the money. Maybe that's an overvalued asset. That's one way that I've thought about it. But
Yeah.
I want to hear more about building the Bitcoin24 model that you worked with the MicroStrategy team on. For those that haven't seen it, I guess maybe explain what it is and like maybe your involvement and your role in helping build it.
Yeah, sure. So the origin of this model was the Nashville conference that happened in June or July this year. And Michael Saylor was delivering a keynote speech. And he really wanted to focus on building a presentation this time that he would deliver, which would talk about the different strategies that individuals or corporates or nation states can take to benefit from shifting to the Bitcoin standard or adopting Bitcoin as, let's say, a treasury asset. And the way to go about that was not just talk about it qualitatively, but actually put some numbers out there and talk about if you take steps XYZ, then this could be the outcome. And the building blocks of that were first building this Excel model called Bitcoin24, which had a 21-year price forecast for Bitcoin, which I know has gotten a lot of attention and criticism on Twitter. But that was not the main objective of it. There was a 21-year price projection, which was important and fundamental to then be able to build these different micro models. And each micro model and the micro models were basically models for individuals, corporates, institutions, weak nations, strong nations, and also then the US, and talking about what are the different steps you could take over the next 21 years and what would be the outcome in terms of your net worth or your net assets. So, for example, for an individual, you might either be a normie, not putting anything into Bitcoin, and this would be the outcome over 21 years, given some basic assumptions. Or you could be a Bitcoin maxi, putting your savings into Bitcoin, or you could be a double maxi, also taking some mortgage against your house, putting that into Bitcoin as well. Basically, flesh this out in detail. But more importantly, what we did was, so Michael then eventually went on to go and deliver his presentation built on this model and built on the basic assumptions that we chose. But more importantly, he decided to open source that model. We published the model on GitHub. So anyone can go online, download the model, and then change the assumptions the way they'd like. Change the 21-year price forecast. Also change the macro assumptions for other asset classes like gold, real estate, equities, bonds. Change the strategies for these individuals, corporates, nation states, and then see what the outcome is based on what their preference is for their set of assumptions. So that is the main thing I feel. Like it's a tool that the community could use either to understand and educate themselves or educate their friends in different sort of contexts. And that was effectively the genesis of it and what it is and what we hope it will continue to be in the future.
Yeah, that makes sense. So the price is kind of just like a rough estimate. It's like, it's more so of like if you're an individual, if you are a corporation, or if you're a nation state, like could these different normie Bitcoin or maxi, double maxi, triple maxi, what could maybe, be the result, roughly be the result of, how you're going to think about allocating to Bitcoin?
Yes, exactly. And just to like explain it in a bit more detail, what you could do, for example, if you deep dive into a corporate, you could be putting nothing into Bitcoin, just running your business as is. We'll call that, let's say, a normie strategy. You could be a Bitcoin maxi. You could be putting all your cash flows into Bitcoin, all the cash you currently have on the balance sheet into Bitcoin. And, that kind of maybe makes you a Bitcoin maxi. Or you could become a double maxi or a triple maxi and also issue to buy Bitcoin up to a certain leverage ratio that you're comfortable with, or issue equity and buy Bitcoin. And this is kind of the MicroStrategy playbook that might make you a double or triple maxi. And then we've built the model out so that just by changing these high-level assumptions, you can see what the net effect is on the share price over 21 years. And again, if you don't believe the original price forecast, then you can just go back and change the 21-year price forecast to whatever you think is reasonable. So that's the main idea behind the model.
Yeah. For just the rough default price forecast that you guys came up with, like, was there ever any discussion around like the power law model? Because like it is kind of somewhat similar where it's like diminishing returns over time and somewhat, obviously in traditional finance, they'd be like, wow, this is like very aggressive. Some Bitcoiners might be like, this is kind of conservative. Was there discussion of other models that people have already built?
So we definitely looked into other models and just tried to understand, what is out there, what have people proposed as, again, tools for the community to think and learn about Bitcoin and use it to educate more people. But the way, at least the high level way this price was built or forecasted was that the way Michael thinks about it, the way the team thinks about it is that Bitcoin right now, let's say over the last 4 years, has delivered somewhere in the range of a 50% annualized return. And it also happens to be have a 50% vol or volatility. And given Bitcoin is an open global 24/7 marketplace or capital asset, it should over time continue to outperform other capital assets. And you can just think of the S&P index as one benchmark, delivers about 10-12% return, also has about a 10-12% volatility. So right now, Bitcoin has a 50% return analyzed. It's kind of on the diminishing trend, as expected, as the capital base goes larger and larger. So it will keep falling. But the expectation is that it will always keep outperforming the S&P index. And if the S&P index, let's say 20 years later, is also returning 12%, 10%, then maybe let's just very high level assumptions say that Bitcoin will continue to deliver 8-10% more than that, somewhere around 20% or 18%. So then that's just the basic idea that you're starting with 50% annualized return today. All you're saying is there'll be a step function of it reducing and it will reach, let's say, 20% return over 10-15 years, and then it might stay there and it'll continue to appreciate at 20% from there on. So that's at least the way we thought of it. And again, this is in no way very detailed or very scientific, or it's not meant to be accurate either. It's not meant to show you the price forecast 5 years from now, 3 years from now. All it's meant to do is it's meant to give you a tool where you can put your own assumptions and then layer on these different strategies and really see what can you do as an individual, what can you do as a corporate.
Yeah, it's a great tool. I definitely recommend people go on GitHub or Saylor's Twitter or your Twitter, download and check it out. It's awesome. Do you think MicroStrategy will always use custodians like Fidelity or Coinbase? Or do you think there's ever a future where they, hold their own keys or do some form of like collaborative custody with multiple institutions holding keys?
So on that, I think like the strategy is always an evolving strategy where at each point in time, as a company, the management team would look at the best, most effective strategy. There are always trade-offs with different sort of custody solutions, and everyone's cognizant of each kind of trade-off. So you can effectively never say never to anything. Whatever in that moment seems like the right way for custodying the Bitcoin and is in the best interest of your shareholders, maximizes security, maximizes all these different parameters that you care of, that would be the most optimal strategy. So yeah, all I would say over there is it's constantly evolving and constantly being looked at, and the best strategy is always being chosen.
How do you think about the future of like Bitcoin and banking, like with JP Morgan potentially custodying Bitcoin and borrowing your Bitcoin and earning yield, or just like long-term like Bitcoin and banking in general? I'm curious to hear your thoughts.
Yeah, that's interesting. I know it's also been catching a lot of sort of attention within the Bitcoin community these days about like just Bitcoin and banking and fractional reserve banking. What might the future look like? It's super interesting. I feel like, yes, the next step, at least in the short term, is big banks are allowed to custody Bitcoin, and they could then potentially have that fully in their reserves. They could fractionally reserve that as well. Who knows? And if they are fractionally reserving it, then they would be generating some interest income or some yield on it. They might be passing on that yield to the depositor of the Bitcoin. So all of these things might happen. But obviously the thing that Bitcoin maxis or Austrian economists will point you to is that you can fractionally reserve it, but then when there is a bank run and you do not have a lender of last resort because it is truly a fixed supply, scarce asset, then the bank cannot be saved, cannot survive. And I think it then comes down to proper credit risk management, and just banking is all about risk management and finding the right level of reserves, finding the right sort of people you want to lend to or corporates you want to lend to, manage that credit risk well. And I think that will be the medium-term future, that banks will start custodying Bitcoin. Bitcoin will start growing as a percentage of their assets being custodied more and more and more, eventually, gradually. Who knows, does it reach 50%, 80%? How many years does it take? But you'll see them being very prudent with their risk management. And you might not see as much of this Wild West cowboy behavior that was more prevalent in the crypto ecosystem, with effectively you're just lending Bitcoin to people who want to short Bitcoin or trade other cryptos and whatnot, there might be a different sort of banking that might emerge out of this. But also taking it very far out into the future, if you like, the way you thought about Bitcoin originally when you were getting orange pilled or you're falling down the Bitcoin rabbit hole, is that the big innovation is self-banking with Bitcoin. You don't need to necessarily have a custodian. You don't necessarily need to give it to someone. So while yes, banking will always exist, and there's nothing fundamentally wrong with banking, there's nothing fundamentally wrong with credit. If someone has capital, someone does not have capital, then yes, they should be giving that capital from point like person A to person B and have whatever arrangement between them, credit, equity, or whatever. But if you do not seek capital, you don't want to give out capital, you don't want to yield on your capital, all you want is to just preserve value for some time in the future. You want to remove uncertainty from the future, you can just self-bank. And I think all of us doing self-custody is kind of just self-banking. And I think that continues to be, in my vision, is like the dominant sort of place where most Bitcoin is stored.
I tend to agree on that as well. Like it seems like, especially like in today's world, you kind of have to do before Bitcoin, you have to do banking, you have to invest in the S&P 500 because that's constantly like you're trying to get more yield and as the dollar is getting debased. But like in the Bitcoin world, if you can actually earn a return that's greater than the S&P 500 by just holding spot Bitcoin, then it seems like a lot of people probably just end up doing that.
Yep, I agree. And the question is, obviously in the world we live today, you need yield. Everyone seeks yield. You can't just sit on dollars. You can't sit on a local currency. But that mindset will shift. And the question really becomes, do you necessarily, to begin with, need yield on your Bitcoin? And if you do, and if you want that reward of some yield, then you will have to take some risk. And I think I think again, the way Michael Saylor describes it is Bitcoin just brings rationality back into the ecosystem. Currently, everything seems a bit irrational, not very sound. Things seem broken. But as Bitcoin becomes larger and larger and is like almost pervasive across all of these different sectors or aspects of our life, it just keeps introducing rationality to the different people, to the different systems, and then things get built on top of it. So yeah, that's the medium-term future, perhaps.
Yeah, that's a great point. It's like in the dollar world, earning dollar, like USD denominated yield is actually risk-free because you can put it with like the buy T-bills and you get basically that's the safest, person that's going to borrow dollars and actually pay you back because they can print the money if they need to. But it's in the Bitcoin world, it's like, yeah, you can outperform Bitcoin. You can get yield on your Bitcoin. It just requires real risk, which is
exactly
the opposite of the dollar system.
And I haven't actually fully gone into the depths of learning or reading this concept. I think Nick Bhatia or someone else in the Bitcoin ecosystem wrote about like the risk curve for Bitcoin and like the starting point being like Lightning. Lightning will offer you some yield effectively, but you're still taking risk because you don't have effectively just Bitcoin. And that is like the start of the risk curve. And then you can go further up, get more reward, get more yield, but also take more risk. And the question also then comes down to, let's say, if you do find an opportunity where something is offering you some yield on Bitcoin, what is the right discounting rate for it? From at least a conventional, traditional wisdom, you take your risk-free rate, which is the US Treasury return, and then you add some market risk premium, you do all of this, and then you discount the future cash flows back and the future yield back to the present value. Let's say you do find an opportunity, you're trying to just understand how to value something that's offering you a Bitcoin yield, then what is the right discounting rate? There is no risk-free rate. I don't know. I actively think about these questions right now, and I really wonder, like, how do you discount a future Bitcoin yield back to the present?
Yeah, no, it's a good question. I guess we'll just figure it out over time. When do you think other companies will start copying MicroStrategy? Like we've seen, whether it's Tesla, Square, other ones, buy a little bit of Bitcoin. What do you think is holding some companies back from going double maxi or triple maxi and just buying a ton of Bitcoin and basically doing the Saylor strategy?
Yeah, I think my personal opinion over here is that one, obviously you need the founders or management teams to be convinced on Bitcoin. There needs to be some catalyst, some urgency in understanding Bitcoin.
Secure your retirement with a Bitcoin IRA from Unchained. Right now, get started with no setup fees and enjoy your first year free. You can open a Roth and traditional Bitcoin IRA and even upgrade old forgotten 401ks and IRAs into tax-advantaged Bitcoin where you control the keys. Get started today at unchained.com/frontier. There's no better way to hold tax advantage Bitcoin for decades. That's unchained.com/frontier. And now back to the show.
The way many people describe it is, unless you have a mortality event and you're near a close death experience, you don't really go out of your way to learn something completely new. And maybe that was the case with MicroStrategy to a certain extent. So much cash on the balance sheet, yields go to zero during COVID. You really have to find a way to save these $500 million. What do you do with it? You learn about Bitcoin, put your money into Bitcoin. So there was that urgency, there was that catalyst. And I think that is really missing for a lot of different companies, a lot of people in just running big Fortune 500 companies, running investment funds. There is no urgency, there is no near-death event happening to them. So that is one, that just Bitcoin education. How does that happen? What is the catalyst for it? But second, and more importantly, I feel the roadblock becomes just the lack of concentrated decision-making. What happened with MicroStrategy was Michael Saylor could effectively learn about it with the board, with the management team, but still almost in a way, as the founder, having effective voting control over the company, make that decision for the company and for the shareholders. And that concentrated decision-making helped, obviously, with getting all approvals as per the internal policies and having all stakeholders aligned. But you also saw that to a certain extent with the other companies who adopted it. It was Elon Musk, Jack Dorsey, founder-led tech companies where a lot of decision-making lies concentrated with the founder. And that is what lacks in most governance structures of public or private companies. You don't have concentrated decision-making. So even if one person in the management team is convinced, it is such a big hassle to first get there for that one individual. Now you need to get 10 other individuals there at the same place. And even if you do, you might still have some activist shareholder come onto your cap table and then pressure you. And there's these 100 different risks you have to think about all the time when you don't have concentrated voting power or decision making. So I think that is another roadblock. And that is why, and I've spoken about this earlier, is I feel like private equity run companies might be suitable candidates for implementing a Bitcoin strategy where you're effectively raising capital from different LPs and investors. And then you are the person solely in charge as the fund manager to make executive decisions over that capital. So you could use it to obviously buy out a company, take leverage, and then just do the typical private equity model. Or you could also just buy a company or infuse capital into a company and then recreate the MicroStrategy playbook. As long as you, the fund manager, is convinced and you're able to convince your LPs or investors who you're raising money from to let you execute the strategy. And maybe SPACs could be something similar, but I feel like there'll be these different kind of financial engineering or financial things that will happen around this. And it will be less so of maybe large existing companies being convinced internally in their internal ranks and then them shifting gears. I think it'll be outsiders getting capital in, putting it into a business and then recreating it.
I agree. I've thought about like the private equity idea too. It seems like someone's probably going to eventually do that and crush it. Can you kind of dive deeper into MicroStrategy's like Bitcoin acquisition strategy? Like, how do you guys think about issuing equity or issuing convertible notes and to acquire more Bitcoin? Like, what's the general, maybe explain that to people if they don't really even know what that is, but explain the strategy.
Sure. Just to start off, there is no thought or effort put into trying to forecast Bitcoin price movements in the short term and, trying to time the market that we're going to buy here when the price falls or it might dip like this, looking at some technical charts. None of that happens. There's a famous Michael Saylor quote saying that we'll be buying the top forever. The idea is that as long as you believe this asset will outperform other assets and it is the apex property, apex asset, then you just want to keep buying more and more of it. But it's not about just accumulating more Bitcoin on your balance sheet and growing a Bitcoin stack. The more important or useful metric to look at is the Bitcoin per share metric. And for each shareholder, effectively, how much Bitcoin is there on the balance sheet? What is the Bitcoin per share? And then, as you said, we go out, issue equity or issue debt, different kinds of debt, and buy more Bitcoin with it. Each time you do this, yes, you increase your overall Bitcoin stack, but how much is the Bitcoin per share increasing? And what is that Bitcoin yield, effectively, your BTC yield, which is something we started publishing in our earnings presentation starting last quarter, talking about what has been the yield over the last 3 years, what is our KPI for the next 3 years, what yield are we targeting? So then the question becomes, you have these different tools in the capital markets. You can go out, issue equity, or you can go out, issue convertible debt, senior secured debt, or any different kind of liability instrument and buy Bitcoin with it. And the kind of calculation you would do at the back end is really understand what is the effective increase on the Bitcoin per share. So although you're effectively, the conventional sense, diluting shareholders by issuing more shares, but it is accretive dilution. Because each time you're actually diluting your shares, you are accreting Bitcoin per share, which is in the benefit of all shareholders, existing and new. And that's the math you're doing effectively. And that's the strategy that you're building, finding the way to keep increasing your Bitcoin per share, finding the different tools in your kit to go out into the capital markets, issue more liabilities, keep expanding your balance sheet, and in a way, keep securitizing more and more Bitcoin, because you're just buying one asset with it. You're almost securitizing it for different kind of investors, people who want to buy convertible debt and have Bitcoin on our balance sheet, or people who want to buy, let's say, high performance levered Bitcoin equity and have, again, Bitcoin as the asset on our balance sheet. So that's the broad way we think of it and execute it.
Do you follow people that like track MicroStrategy's like NAV multiple, like the multiple over the amount of Bitcoin that MicroStrategy holds, I guess, per diluted share? And do you have an opinion on like how to think about what the correct NAV multiple might be?
Yeah, so I do follow the Twitter discourse from time to time. I'm not very, very active. I'm not that daily, but there's so much interesting content and so many really, really smart people posting some great analysis, going on Twitter spaces, having some great discourse as well. And I know that there's also like this subgroup, I think, within Twitter, like 5,000, 7,000 people, Bitcoin maxis, but also MicroStrategy maxis, like a very passionate retail shareholder base that just, they have some really interesting content. And to that point, then they talk about what the multiple to NAV is and how do they think of the multiple of NAV, and what might it be in the future? What has it been in the past? Looking at the trajectory of it, when has it gone up? When has it gone down? And again, I think the way for me, personally, how I think of it is that it goes back to the earlier point. If there is some Bitcoin per share and there is some increase in the Bitcoin per share over time, then if you can come up with some assumption for yourself that the Bitcoin per share 3 years out, 5 years out, 10 years out will be this, and then you discount that back to the present, that will give you effectively the net present value of the Bitcoin per share. And that might be at a premium or at a multiple of the actual Bitcoin per share today. And that is effectively that multiple to NAV. So at least that's the scientific way of thinking of it, that you come up with your assumptions for what the BTC yield will be for 3 years, 5 years, 10 years, or in perpetuity, a terminal growth rate of Bitcoin per share. And then you find a way of discounting it back to the present. But then the question is, what is the discounting rate? And hence, this might be your intrinsic value. But the other way of thinking about the price of any market good is just demand and supply. And trades are being made at the margin. People are buying and selling at the margin. And that just reflects the price of that today. And if there is, greater demand and supply, price will go up. If there's greater supply, then demand, price will go down. And the multiple to NAV will change in that way. But that's just the broad way I think of it.
Yeah, it's very interesting. How do you think about deciding between issuing convertible notes, issuing like senior debt, issuing more equity? Like what's the strategy behind picking each vehicle to raise additional capital to buy more Bitcoin?
Yeah, so that's a good question. And the way to think of it is that both equity and convertible debt, in a way, effectively is the issuance of shares, either for equity right now or for convertible debt. The conversion happens, then the debt converts to common equity at a future date, maybe 6 years, 8 years in the future, depending on the maturity of that. So both of them are dilutive in the traditional sense, but again, as we discussed, it's accretive dilution. And both are effectively giving you an increase in the Bitcoin per share metric, which is the useful metric that you want to track. So then you can look at effectively what is the net effect of the Bitcoin per share, like how much is it increasing if you are issuing X million dollars of equity versus X million dollars of debt, or convertible debt rather. And then you have to take assumptions on, this is the maturity of the convertible debt, this is the interest payment or the interest payment schedule over the 6 to 8 years, and hence this is the additional dilution that might happen in the future. That's one. You effectively look at the net effect on Bitcoin per share for each lever. But more importantly, what the distinguishing feature is between the two is that if you do issue convertible debt, at the end of the day still is debt with some downside protection. So it doesn't necessarily convert into equity. If the bonds don't trade well, they trade below par, then at the time of maturity, there will be a redemption in cash for that So it is still in effect debt on your balance sheet. It's leverage on your balance sheet. And then the question is, how much leverage are you comfortable with? And what is the maturity of that debt? You don't want to take short-term debt, and you don't want to be very highly leveraged, because then if the price of Bitcoin crashes 70% in the next bear market, then you're underwater and your strategy was bust. So you want to take long-term debt. You ideally want it to be unsecured. You don't want to be posting your Bitcoin as collateral. And you want to manage the overall leverage, let's say at 20 or 30% of the market value of your Bitcoin. So what that means is, even if Bitcoin crashes 70%, it needs to stay there for 8 years or 6 years until your debt comes due for you to actually be in trouble. Otherwise, you'll be fine. So each time you raise convertible debt, you're kind of levering up where your leverage is going up. And each time you're issuing equity and buying Bitcoin with it, you're actually levering down, because now the leverage as a percentage of your overall Bitcoin market value is going down. So it's almost like two different tools. One is a levering up tool, one's a levering down tool, but both of them are helping you increase Bitcoin per share. So it's about then being opportunistic and finding the right move for that particular quarter, that particular time, and executing on it.
With these strategies, like in relation to the NAV multiple, like I guess the higher the NAV multiple, the higher the potential increase in Bitcoin per share. Is that correct way to think about it?
Effectively, yes, because then each time you go out and issue equity, the greater the premium has been, then each dollar raised and used to buy Bitcoin ends up resulting in a greater increase in a Bitcoin per share. So that's true, that the higher the NAV goes, effectively, the more effective each subsequent raise becomes in terms of increasing the Bitcoin per share. And I know it's been also something that's been very active on Twitter in terms of the discourse lately, like multiple to NAV, and at different multiples, what is the effective like net effect on the Bitcoin per share. But yeah, you framed it correctly. It's exactly that.
Yeah, I mean, to me, it seems super interesting because it's like, if that's true, like the higher the NAV multiple goes, then theoretically, the more Bitcoin you could stack per share. But it's also kind of like somewhat of like a catch-22 where it's like, okay, well, if the NAV disappeared for whatever reason, then it's like the strategy to get more Bitcoin per share becomes significantly less effective. Or if it goes back to 1, then issuing equity is not going to increase Bitcoin per share at all. So it's like, it's either really high or really low. I don't know. It's kind of an interesting problem.
Although on that point, what I'll say is, even if the NAV for whatever reason comes down or reduces, you still have the option to buy Bitcoin with your cash flows, because MicroStrategy has a robust software business generating consistent cash flows with less risk. And the second is, you can still do the convertible debt issuance. And I agree, equity might not end up resulting in a net increase in Bitcoin per share, but your convertible debt is always being issued with the conversion at a premium to existing share price. So it'll be a 40%, 30% premium, and that will still help you increase the Bitcoin per share. You could still go out and take debt, just straight debt, senior secured debt, not convertible into equity. And then as long as the Bitcoin price outperforms the cost of debt, whatever it might be, 5%, 6%, 10%, then again, you have a net increase. So even if for whatever reason the multiple to NAV falls, you still have all these different tools which will help you increase your Bitcoin per share. And then if this is increasing your Bitcoin per share, then the NAV should not be 1, or the multiple to NAV should not be 1, then should be greater than 1. And it's just like, it's a reflexive flywheel, and there's no end to it. It's magic in financial engineering, maybe.
Yeah, it's pretty crazy, actually. Are there limits to like how much equity you can issue at one time, or how many like convertible notes that you guys can issue at one time, or like how do you guys think about that?
So I'm not extremely familiar if there are rules around like the securities issuances from like a very legal or regulatory perspective, and I don't believe there are, but it's kind of limited by just what do you have approval for at that point in time. Like, we went out and filed for an ATM issuance of $2 billion. And hence that means right now that is the capacity in terms of how much equity we could raise. You wish to raise more equity, then you need to go out and make a new filing with the SEC. And again, you need to have all different stakeholders aligned on that, because it's not like you can just execute it by yourself. You have banking partners and you have different other stakeholders involved. So there's effectively, it's more about the execution of getting the different things in place to be able to do it, and less so, I think, about limits being posed in terms of just capacity from a regulatory perspective or legal perspective. And on the convertible debt, very similar to what I just said on equity, but also being very mindful of that leverage ratio. Like, how much leverage are you comfortable with? Like, do you want to lever up from this point or do you want to lever down? If you want to lever up, then maybe yes, you can raise more convertible debt, you can raise more debt. If you want to lever down, then maybe you don't want to do that. You want to wait, you want to issue equity, you want to wait for the price to rise, you want to wait for something else.
Is there anything that, whether it's, I guess, still focusing on MicroStrategy, like Twitter has been talking about, or whoever on podcasts or whatnot, is there anything that's like super wrong that you want to make sure gets corrected, that people are saying that you're like, what, this, I don't know why you're saying that? Or is there nothing that can come to mind really?
Very focused on MicroStrategy or generally, or?
Yeah, I mean, however you want to answer it, but yeah, MicroStrategy.
Yeah, I'm not, like, nothing particularly springs to mind. I also feel like when I see a lot of discourse focused on MicroStrategy on Twitter, sometimes I see it and it's fun to see all the bullish sentiment or all the creative things that people come up with, even if it's not like deep technical analysis, just like fun, creative stuff. I know there's a lot of AI images floating around of Michael Saylor, of just MicroStrategy related things, which is a lot of fun. But there is no specific negative criticism that comes to mind. And even if there is, around these ideas of, oh, there should not be any multiple to NAV and whatnot, I think we just discussed the different reasons why a multiple should perhaps exist, or what happens if a multiple does not exist. And at least for me, the thing that I felt a bit I felt like I wanted to give a retort, I didn't really give a retort, was all of this hype or criticism that started being drawn towards this 21-year forecast for the Bitcoin24 model, completely unrelated to MicroStrategy, because it seemed like everyone thought that the purpose or the objective of that was to have Michael Saylor come out and say that, this is my price forecast for 21 years and that's it. But that was like 10% of what that model was supposed to be, or what the presentation was supposed to be. So having all of these guys, completely start criticizing and picking different small things, and that was like, okay, that was not the point of it. What you should be doing is you should be downloading the model, putting in your model into it, putting your Bitcoin price forecast into it, and then seeing what it means for different people. So that's what I would say to that.
Yeah, no, that makes sense. I had another thought in regards to like the limits of like issuing equity or convertible debt. Like I think a couple of days ago, I asked ChatGPT, I was like, what are like some of the most historic or largest equity issuances like in public markets? And like they weren't that very, very big, I guess, because currently everyone's focused on like just buying back their shares rather than issuing equity. And it's like, if MicroStrategy continues growing and becomes a $100 billion company or larger, it seems like they're flipping the entire model on its head, where now they have to issue $10 billion of equity or $20 billion of equity. And it'll be interesting to see how the market reacts to that. And like, if that's even like, if those numbers are even possible, or it's just kind of like flips everything upside down. And it's going to be fascinating to see what happens. I don't know if you have any thoughts in regards to that too.
Yeah, no, I completely agree. And even I sometimes imagine, like, what is that number that one day might be put out in the press by MicroStrategy, 2 years, 3 years, 5 years from 10 years from now, who knows how long this exact strategy continues in this manner, and what is that limit? Because right now it's a $2 billion ATM filing that we did like 3 months ago effectively, and who knows how much larger it will be in the future. So yeah, it's super interesting. And at least for now, I think there is no effective cap to what this strategy might be.
Very cool. What about, I've seen discussion around this as well, is like a lot of people invest in markets and save for the future via passive index funds, whether it's like the S&P 500 or a Vanguard total market index fund or something like that. Is there any like discussion or thoughts around MicroStrategy eventually getting into the S&P 500? I know it's like MicroStrategy does have an operating business, but at this point, a large part of the valuation is probably just, the Bitcoin that it holds in its Bitcoin strategy. Can MicroStrategy get added into the S&P 500? And have you guys thought about that, or how do you guys think about it? Or how do you think about it?
Yeah, that is one thing where, very honestly, I haven't been part of much discourse internally with the MicroStrategy team. So I would not be able to comment if that is something they actively think of or are, solving for. If you could potentially solve for it, I don't even know that. I think for me personally as well, I don't think about it much. It's something that perhaps in my understanding is not in your control. It's nothing that you could really do to change it. So as and when it happens, it happens. But up until then, you just do what's in your control and you do it correctly and you do it right the first time. So I think that's just the way the team thinks, that the inclusion in different indices might happen or will happen with time if the strategy keeps working. But for the strategy to keep working, you got to keep executing correctly and do the things that are in your control.
In this frontier moment, CJ is talking about MSTR and potential inclusion in the S&P 500. While it would be exciting for MicroStrategy to be added into the S&P 500, it is already included in several major passive index funds. MSTR is part of the Vanguard Total Stock Market ETF, VTI, with an AUM of about $441 billion. The iShares Russell 2000 ETF, IWM, with an AUM of about $70 billion, and the SPDR S&P 1500 Composite ETF, SPTM, with an AUM of about $9 billion. These funds offer broad exposure to U.S. equities, with MSTR representing a small percentage of their holdings. So many people in America who have a 401k likely already have some Bitcoin exposure without even knowing. And now back to CJ.
So yeah, unfortunately, I'm not familiar with the discourse internally within the team, if there is any.
No, that makes sense. Well, I hope it does happen. I think it'll be good for America and good for a lot of people's savings that they just have stuck mindlessly in passive index funds.
Yeah, actually, I didn't think of it that way, but that is true, right? Like Bitcoin eventually is the apex asset or investment that takes over everything. Effectively, the S&P 500 returns will, in a way, start tracking Bitcoin returns if every company in the S&P 500 has Bitcoin on the balance sheet. So it's just a question of how and when it happens and to what scale does it happen in the next 5, 10, 15, 20 years. And yeah, that will bring a lot of people effectively net exposure to Bitcoin without ever having to go and buy Bitcoin itself. And all their current investments in these passive index funds will just be the way for them to play the Bitcoin game. So yeah, that's an interesting thought.
2 more questions and then we can start to close it out. This is kind of related to what I just asked, but more focused on Bitcoin. What is something that you believe that most Bitcoiners would disagree with?
Yeah, that's an interesting question again. I'm not fully sure. I think at least I know what I think differently now as opposed to what I thought 2-3 years ago when I originally got into Bitcoin, which is how I think a lot of people might think about Bitcoin in the present as well, is I was just so obsessed in the past with Bitcoin as this tool for economic empowerment and getting sovereignty back to the individual and removing the tyranny of, I don't know, government, central banking or whatnot. But these really harsh or strong opinions or thoughts, which were very important and influential for me to actually understand Bitcoin fully and truly become, like, let's say, a Bitcoin maxi. But it is not very good or constructive to talk about Bitcoin that way to someone new and try to explain it to them with those same strong, passionate arguments and, trying to appeal to their will to wanting to be individual or wanting to be sovereign. Like, it just doesn't work. So what I've started realizing is the framing of your argument is extremely important. The way you frame Bitcoin to someone who doesn't understand Bitcoin is very important. And I don't know if many Bitcoiners agree with me or disagree with me over there, but I think at least I would disagree with that 3 years ago. And now when I approach someone new and they have some high level interest, which I can maybe, pull on, then I'm not sending them a 4-hour video of Saifuddin Ammous on Lex Friedman anymore, or a 4-hour video of Michael Saylor on, again, Lex Friedman anymore. I'm sending them something that's a bit more digestible, that's a little bit more easy to read, easy to understand, and gets them interested from the angle or interest they already have, like the lens that they are looking at Bitcoin with. Like, some people are really interested in energy, some people are really interested in like human rights, some people are really interested in just investing and returns and beating the S&P 500 and whatnot. So that framing is very important. There's a quote that goes by like, when you meet a swordsman, draw your sword, do not recite poetry to one who is not a poet. So yeah, sure, if I meet a Bitcoiner, I'm going to like talk about all these different ideas and things that influence me. But when I meet someone new, there's no point of talking about just Austrian economics. Like, people don't have an interest in Austrian economics. You've got to approach that with the right framing about why maybe a 1%, 2% allocation to Bitcoin might be useful, why you might want to pay attention to MicroStrategy, why you want to include MicroStrategy in public portfolio or whatnot. So I think that just framing is very important.
Yeah, I agree with that. You got to realize who you're talking to and who you're effectively trying to, quote unquote, sell Bitcoin. Last question. What do you think is the biggest risk to Bitcoin?
Okay, that's an interesting question as well. Funny story, when I was originally learning about Bitcoin, through Twitter, through YouTube podcasts, I listened to Gigi on some podcast and I started reading his work, and I think it's incredible. Like, just, it's almost poetic the way he writes about it. It's so beautiful. And I reached out to him via Twitter DM, never expecting him to respond, but I said, while I was still trying to understand Bitcoin, I was like, what is the biggest risk to Bitcoin, or how do you kill Bitcoin? And he just sent me a link to an article he had written. How do you kill Bitcoin? Question mark. You scroll down, you don't, full stop. And that was it. So like, that was me trying to understand, oh, what is the biggest risk to Bitcoin? And I'm like curious to learn from these people who are writing great stuff. And this one person I really admire saying, oh, you don't kill it, or you can't kill it. And I kind of also believe that now, that there is no fundamental risk to it in the sense that will like just stop its natural adoption. I would say I don't have the deepest technological understanding of, the literal code written, or the different sort of soft forks that have been pushed in the past, and what are the risk surface areas for those different pushes or commits in the past. So maybe there is some unknown technological risk, but I think from just the way it exists and operates today, I think it'll just keep going through its natural adoption. The risk I do think of, however, is more from a personal Bitcoin perspective. Like, is my custody arrangement the right one? Do I need to change that? Is there a right mechanism for my family to get it in an unforeseen situation where something happens to me? And also to some extent, like jurisdictional risk. Like, am I staying in a place where the authorities might suddenly turn very harsh or hostile towards Bitcoin? And am I too public with my Bitcoin interest or Bitcoin holdings in that sense? And obviously you could exit a jurisdiction. That is what Bitcoin empowers you to do, that you can just sort of have 12 votes in your head, go anywhere and have all your wealth with you. But what if you don't want to do it? What if you want to build a base in one place with your friends, family, and want to stay there? Then how do you tackle that jurisdictional risk? And I think it's just, again, natural adoption of Bitcoin by everyone for their self-interest. So authorities also eventually themselves realize Bitcoin is good for them, and the game theory plays out, and eventually everyone is friendly to Bitcoin, hopefully. Yeah, custody and jurisdictional risk, perhaps the two risks I think of.
Yeah, that's a great point. It seems like there's not many major risks to Bitcoin itself. It's more there's potential risks to your Bitcoin.
Exactly.
Well, CJ, this has been awesome. I really appreciate you taking the time to do this. I feel like you guys at MicroStrategy and yourself do fantastic work. The model is great, so I'm glad we could talk about it. Where can the audience go learn more about you and stuff that you're working on?
So I'm not extremely active on LinkedIn or Twitter, but you could find me on LinkedIn. I know very few Bitcoiners or Bitcoin folks are ever on LinkedIn. I know the discourse is all happening on Twitter. So I am also on Twitter. I think my handle is _Chaitanya Jain, my first name followed with the J. And my DMs are always open. I love connecting with any people in Bitcoin, love helping anyone. I received a lot of help personally when I was trying to enter the ecosystem. So more than happy to give back. And it's been incredible speaking with you about Bitcoin. I don't get to speak about Bitcoin a lot here at Business School. So each time I have a conversation with someone, even if it's virtual, it re-energizes me. So thank you so much for having me on. And I had a great time recording this with you.
Absolutely enjoyed it.